Hello, this is Jordan. This video is being recorded on the afternoon of Thursday, July 4th, 2024. Thank you so much for tuning in, and I'd like to wish everyone out there a happy Independence Day, happy July 4th, and as you can see, my attire is appropriate for this day, so hope you all are having a great holiday. If you're watching this after July 4th, hope you had a great holiday. Now, in this video, I'm going to talk about the second half of the year and what may be required for gold to see the fireworks that we're seeing today in the second half of the year. So let's get into it with some charts. So the first thing to look at is gold against the 60-40 portfolio. Again, this is gold against 60% stocks, 40% bonds, total return, so it does include dividends. So this is down here, this is gold up here, and as we can see, of course, the beautiful cup and handle breakout here, but here gold has not broken out. It has not exceeded this line against the 60-40 portfolio. Now, if we go back to the previous two secular bull markets, we can see this first line is where gold bottomed. It took some time, but in 1972, gold broke out against the 60-40, and that's when it really started to explode in nominal terms. Same thing happened here, where it took 4 or 5 years for gold to really break out and give us the confirmation signal of a new secular bull. Again, that's the breakout against the 60-40. So gold actually bottomed at 99, then it had the second bottom here in the spring. And so this bottom here, second bottom here, I mean, it slowly was moving up against the 60-40, but it wasn't until 2002 when we got that signal. And by the way, after that signal, that is when miners and juniors like really exploded. Like this period right here and this period right here, it wasn't the strongest for the gold price. It did trend up, but that is when miners and juniors, like, they really killed it. So that's important to keep in mind. And this is where we are here and now. I mean, you could pick the bottom, the nominal bottom here for gold or here in 22. And so what we are seeing, the fact that there's a nominal bottom and that it's taken gold, it's taken a lot of time, not a lot of time, it's taking some time for gold to give us that signal, breakout like this. That is in line with what happened in the past two secular bulls. So again, if and when we get this signal, that is when we're going to see gold really explode in nominal terms and have those fireworks. And so to think about it another way, what we need for gold to really explode is for some of that money that's going into stocks and conventional assets, but mostly stocks, some of that money to move out of stocks and move into gold. And so another way to look at that, or another way to look at when that could happen, it could be when we start to see more demand for the gold ETFs. This just looks at the GLD, the outstanding shares for GLD. So when there's more people investing, more people buying GLD, the trust adds more shares. So this is, as far as ETF assets, it's another way to look at it, but this is a similar chart. And we can see, since this bottom at the end of 22 and this one at the end of 23, you have lower lows in the demand for the gold ETFs. So what my thinking is, if at some point we get a rate cut later in the year, and again, if the Fed starts to cut rates, that's a signal of real interest rates starting to decline. And we know that real interest rates are a huge driver for gold. And so, you know, and conventional, or I should say mainstream investors, when real interest rates are going down, that's what causes them to buy gold. So this is all aligned. If we see weakness, problems in the stock market, the Fed has to cut, you're going to see a lot more buying, a lot more conventional money move into gold. And again, that's what's missing. That could lead to gold breaking out against the 60-40 and getting that explosion that I talked about at the beginning. So this chart is an indicator of that, and so we need to see more demand like that, probably before gold is going to make that explosion. Just a couple more charts. So this is the Gold Bull Analog chart, and this is something I updated because my average line was actually off. I intended to show in past charts the average of the 4 strongest bulls, but I had the 3 strongest and I had one that wasn't as strong. So I corrected this today, and we can still see that the current one, black, it's in line with the average of the 4 best. This dotted line is the average. So as far as this consolidation in gold, we really want to see gold hold and then continue to move up and make that next leg up. That would be consistent with a real bull market and something that's consistent with the strongest bulls. And so, the 1970 bull, I mean, that didn't get going until 1972. That's why it's down here. But the other three, we can see and we can look by the end of the year. There's this one here that went close to 3,000. There's this one here, which, also close to 3,000. And then this one, I'd have to check, but, so that's basically the three strongest. They all, based on the scale, they all hit 3,000 basically by the end of the year. Can gold hit 3,000? Again, if we see weakness in the stock market, you see the Fed cutting and you see capital buying the gold ETFs, then yes, that can happen. 3,000, that's a good target for the end of the year. I mean, if not, if that doesn't happen, then obviously the upside potential is lower. And so to sum things up, here are the daily charts going back 4 years or so, gold here, silver here. And we are at an interesting juncture because gold, as it's held 2,300 or 2,290, I mean, once here, and then in the last week or two, you have another hold here. And so maybe it's time to start thinking about this developing into a consolidation instead of a topping pattern. We'll see. Yesterday was a great day. We'll see if it doesn't give it all back and do that. But again, the longer this holds like this, the odds are higher that this is turning into a bullish consolidation. Silver's action, similarly, it's looking bullish. We go back here where it had the break above 26, hit resistance, came back, perfect retest of support, previous resistance here. And now we see the same thing here where it had this move up above 32. Now it comes back. It looks rough, but it bounces perfectly at 29, then comes back, retests it again, another good move. And so holding above 29, that's important because, look, 29 you can see, this is choppy and messy here, but 29 was basically the resistance here. So the fact that silver held above it once, twice, we'll see. I don't know if it's going to retest it again or not. Nobody does. At times, we're all just guessing when there's not enough information. But it's the same thing with this right here. I can't tell you if it's going to break or stay in this box, but what I can tell you, the longer gold stays in this box and the longer silver holds above 29, that's a really, really good sign for the sector and for a potential upside explosion over the coming months. This also looks encouraging. I'm not a fan of trend lines, but people use trend lines when there's like 4 or 5 or 6 touches. You have this here, this touch here, this touch again. So trend lines are powerful when there's numerous touches. If there's only 3, that's not enough. So you had this uptrend in gold divided by silver, the gold-silver ratio. Then it broke down here in May. You had a bit of a rally, and it looks like the rally is starting to fade. So again, if silver is going to hold like this and gold hold like this, you're going to see this eventually roll over. Sorry about that. You just see eventually this could roll over here down towards 70, even the high 60s. So that's it for this holiday video. Thank you so much for tuning in. I hope you're having a great 4th of July, Independence Day. And that's where we are for gold and silver. Starting to look a little bit better, but it really comes down to, does silver continue to hold 29? Does gold continue to hold 2,300? Because if they do, if these levels hold over the coming weeks, that's a really, really good sign that precious metals could be setting up for that upside explosion in the second half of the year. Thank you so much for tuning in. Let me know. Leave a comment. Got an interview with Vince Lanci coming up tomorrow or the next day. So we'll have that out for you in a few days. And thank you again. Appreciate your support. Let me know what you think. Leave a comment. And thank you so much. And hope you had a great holiday and have a good Friday as well.